What's up, everyone? It's Caddy with MoneyVest. So I am back at my home in India. So I did not bring my microphone, but there will be an appearance of the red microphone this holiday season. Surprisingly so, I will be bringing out the red mic once again. Towards the next couple of days, there will be a new microphone, and again, I'm back in my old apartment, as you guys can see, with the cover, with the, obviously the closet, the purple closet in the background. So in this video, I really want to talk about one specific indicator that is now coming down to really, really low levels, and it's also switching from a normal to a rare territory right now, in our Excel spreadsheets that we have created. So as always, if you enjoy this video, find it helpful, make sure that you drop a like, and don't forget to subscribe to the channel. I would really appreciate that. And of course, link to our Discord and Patreon is going to be down below. We'll love to have you on board. There is a 16% annual discount for another 9 to 8 days. Link's going to be down below for joining our Patreon and our Discord. You get access to all the Discord channels, including trade alerts, trade ideas, and access to all the members only spreadsheets. This includes our intrinsic value spreadsheet. So if you want to keep track of which stocks are on my watch list and where the fair values are of each of these companies, that's also going to be included, as well as all the members only private videos. And I also want to remind everyone that we've got a Thanksgiving sale going on right now, including the brand new psychology course. This is literally my life's work. So it's a compilation of all of my 9 to 10 years worth of investing and learning and making all the mistakes. And after this Thanksgiving and Black Friday, it is going to be done. Like, we're not going to have this sale anymore. And the coupon code is going to be Thanksgiving. You can take advantage of it while it's still available for the next few days. And the courses included are going to be fundamentals, technicals, options, and even psychology. You can buy them individually, or you can also look at the bundles as well. And also, finally, TradingView is also having a 70% sale. I mean, this is literally the holiday season, so you are not going to find better deals on TradingView, on our teachable courses, and also our Patreon and Discord as well. So link's going to be down below if you want to join. Of course, take advantage of all of this. So this right here is the Fangman Index, right? So this is basically an index that I've created that tracks the Apple, Amazon, Tesla, Nvidia, Meta, Google, Microsoft, so all the magnificent 6-7 stocks here that have obviously done really well in 2023. So if you take a look at where we are, we talked about this potential bull flag formation, and we're now starting to see a very, very nice breakout to the upside. So if I remove all of these drawings, you'll notice that this right here was the consolidation for this Fangman stock index. So this right here is the consolidation. This was the overall pull of this index. And of course, we're starting to see a little bit of that momentum higher for this particular index, not to mention that we are approaching the same level that we got started with this sell-off in 2021. So we are literally at this resistance right now at 1945 to 1951. And also what's interesting is that on the day, this index is actually down over 64 basis points on the back of Tesla and Nvidia, right? So Tesla, Nvidia, because they're such high market cap weighted companies, and Apple and Microsoft are not really up all that much, this index is rolling over down a little bit over 60 basis points right now. One more thing I want to point out is, of course, the RSI and the MACD reading. So if you come over and take a look, RSI obviously at over 65, MACD also overbought for this overall index as a whole. And right now we're starting to see a little bit of that momentum starting to fade. Now, the most important indicator that I think we need to watch, which is now approaching the red zone, is going to be the volatility. Take a look at the VIX. This week, VIX is down almost 7%. On the day, it's down over 3.6, and we are now trading at under 13 for the volatility. So this has been a 4-week sell-off in the volatility. Of course, this right here, the last week of October, VIX was down close to 29%. The next week, it was down another 5%. The following week, down over 2.6%. And now we are down this week another 6.6% for a shorter week here. So tomorrow is going to be Thanksgiving. The markets are going to be closed. And on Friday, the markets close early at 1 p.m. Eastern. But this right here obviously has been a pretty significant sell-off. Now, if I bring over to our spreadsheet. So this right here is going to be our spreadsheet, as you guys know. So if you come over To this, you can access all of the intrinsic values. Like I said, link's going to be down below if you want to join. You can literally get access to the intrinsic value for each company, our S&P bear market declines, RSI reads, which we talked about in one of our previous videos, how we are in the 92nd percentile, which again is very rare if you go back to over 90 plus years. But I want to draw your attention to this VIX summary, right? So this is where we are. The current read is 12.92. This is updating automatically. So right now it's at 12.88. So we're even lower. But we are in the 17.2 percentile level. And this rareometer, which I like to call it, has now flipped from normal to rare. Okay, this is a rare occurrence because this doesn't happen very often. And if you go back to over 30 plus years, the 12.92 level, in other words, the under 13 level, has only happened 17% of the times, meaning 83% of the times volatility is higher than 13. And the moment it crosses below 10, okay, so right now we're at 12.92 as you can see, the moment it crosses below 10, then we are going to be looking at less than 1% of the times in the last 30 plus years, the volatility has been below 10. So that again is a very, very important number because, you know, we've talked about when the VIX is low, it's time to go. When the VIX is high, it's time to buy. And you can see that every single time the VIX was higher, it was obviously a buying opportunity in the market. And we haven't quite seen a lot of buying opportunities in the last couple years. I mean, I've mentioned the last 12 months alone, October 22, March 23, and October 23. These were the three serious buying opportunities. And you know, it's kind of funny because, you know, we did these videos, we talked about them in October. We were talking about how to get your cash ready. This is a serious buying opportunity because we haven't seen a lot of them, but in October we did see one. And now it's kind of like the opposite side of the spectrum. And I totally understand why it's a little bit more of a difficult thing to kind of absorb and understand because the markets are rallying. Everybody's like, oh no, the market's going to continue to move higher. But that's just not how it works. I mean, we've seen this play out over and over and over again, right? This is really just the nature of the market and the cyclicality of the markets. It's like a pendulum that keeps on swinging from one end to the other. Now, we don't know when the music will stop, or in other words, when the pendulum will stop, and then we don't know when it's going to swing to the other side or how far it's going to swing to the other side. But it's really just a constant assessment of where we are in that pendulum so that we can better position ourselves for when the music does stop, and in other words, when the VIX does end up spiking back higher, and we do see the market starting to kind of roll over, considering how overbought, overextended we really are at the moment. So that's where we are. Something to definitely keep in mind because VIX is now entering the red zone here, under 13, 17% of times it's traded below 13 in the last 30 plus years, and of course, if it drops below 10, you better believe it, I am going to be taking a long position on SQQQs, and I will be trimming some positions, locking in some profits to raise my level of cash exposure, considering how overbought the markets would be at a volatility that's trading below 10. And that is going to really be a very, very low level for the VIX, which could create an environment of some potential opportunity on the short side. And also from a risk reward perspective, the markets are going to be opening themselves up to some potential downside if the VIX ends up at below 10. So hope you all enjoyed this video. Just wanted to break this down very quickly. And again, you know, I know that there's this constant debate, or there's constant back and forth between the market technicals and sentiment and whatnot. But I think it's a very obvious, you know, we've talked about buying opportunities in October. We talked about how to get your cash ready. The time is now. It's a serious buying opportunity. I did all those videos. I mean, you can go back and watch them. And now when I'm talking about, you know, the fact that we're overbought, we're overextended, the time is not really necessarily, in my opinion, to be very aggressive on the long side. It's because it's data driven and it's statistical, and looking at volatility, looking at market breadth, looking at technicals, looking at valuations. It's kind of tying all that together. So hope that makes sense. Hope you guys enjoy this video, find it helpful. Make sure that you drop a like. Don't forget, we've got big sales going on right now for trading views. There's a Black Friday sale, 70% off. Our courses, fundamental, technicals, options, psychology, everything is 50 to 60% off. Coupon code is going to be Thanksgiving. You can apply this and take advantage of it until the end of this next couple days. Link's going to be down below, and Discord and Patreon links also going to be down below with that 16% annual discount that's also available until the end of this month. So as always, happy investing. I'll see you all in the next video.